Yeah, no, I'm back on here. All right, so I'm about to go to GU and USD JPY and break down gaps because a lot of people just don't understand gaps. So we got to go through this very slow so we can understand gaps. Okay, so I'm probably gonna be on here up until like 3:45 because I don't want to like give y'all no short ass webinar. But I do have a one-on-one session at 4. So just want to say that. But let's go to USD JPY. Now, when it comes to understanding gaps, for the people that's new that don't really understand gaps, all you have to do is look at the bodies of the candle and look to the right-hand side of it. That's it. If there's price action, let me take this off. If there's price action to the right-hand side of the body of the candle, that means that area has already been filled. Now, if there isn't no price action to the right-hand side of the body of the candle, that means it's a gap in the market and the market must fill that in. Okay. Yeah, I covered this in a course, but people still, you know what I'm saying? They're still struggling with understanding gaps because at the end of the day, like you have to master that. If you don't master gaps, you're done. Like you're just gonna just be placing supply and demand setups randomly, not knowing where they're about to go, etc. So I'm just gonna simulate this on a 15-minute chart. Now you can see gaps on all time frame. Okay. Now actually, this webinar may just be about gaps because a lot of people just be asking me, "Can you go over gaps?" This is probably going to be like the more clear video on gaps. So let's just fast forward. Now, before I fast forward, price left the gap from right here to here. The body of that candle to the right-hand side of price, there is no gap. I mean, there's no price action in between these two lines. Now, when you fast forward, as they are covering this candle right here, this gap is getting smaller. Okay, it's getting smaller. Now, remember, we're always looking to the right-hand side of price. Now, when they are filling in a gap, they're also creating a gap at the same time. Because remember, we're always looking to the right-hand side of price. So as they're filling in this gap, they're making more gaps. So right here, this is a demand right here because it also have a gap. Look at that green candle, the body of the candle, and look to the right-hand side. There's nothing there. So that what that means? That means the market will eventually want to come down to that area. And we have this demand right here because I was aggressive buying coming from out of this area. So once they come back into this area, they're going to tap into it to go back up. But at the end of the day, we just want to talk about gaps. So this was a gap right here, and they're filling it in. Okay, fast forward. So they completely filled in that gap. So we don't even have to look at that gap right there. It's really nothing to talk about. So let's fast forward. Fast forward. Now we still have all of this left, like from right here to right there and then right there. Now don't look, I'm going to scribble it in. I'm only going to scribble in the areas that really matters. That is the gaps. Remember, we only care about the bodies. We don't care about the wicks or anything like that. We care about the bodies. So the gap is right there, and the gap is literally right here that got to get filled in so the market can be balanced out. Let's fast forward. Okay, it's coming down. Okay, now right there, this candle right here just balanced out this candle. So we're just going to take this off. Now right there, there's no demand on that right there. There's no demand on that. So we don't really care about it. But it's a demand sitting at the bottom, and that will also have a gap. Now, all we're doing is just waiting for it to tap into that zone and then reverse. And that's the setup that we take, but I'm just trying to make gaps more clear for people. Okay, now you see how this red candle was coming down. Take this off. As that red candle was coming down, they're starting to balance out the market. It's not fully balanced yet until it completely go all the way down there. It have to completely balance out this candle right here. So let's fast forward. Okay, boom. Once they did that, once that candle tap into that box right there, now we could take these lines off and everything is balanced out. But again, we're still looking to the right-hand side of price. So we have gaps right here. We have a gap right there. So gaps are constantly being created and constantly being filled. You can also call it imbalance, right? Yeah, imbalances, gaps, same thing. Isn't that one big gap on a higher time frame? Let's see real quick. Let's go on to 1 hour. Exactly. It's the same thing. These two candles, this candle right here got a gap right there. There's no gaps over here. But yeah, just right there as that drop, that's also a gap right there as well. I could mark that up for you. From there to there. Remember, only the body of the candle, only the body of the candle. So look to the right-hand side, there's a gap. As I was filling in this demand right here, oh, we're on a 5 minute, my bad. As we was filling in this demand right here, it was also creating a gap at the same time. But at the end of the day, we only care about our setups. You feel what I'm saying? So when we see our setup, then we're looking for where it could potentially go. That's when we start paying attention to the gaps. How far back will you look for gaps? So it really just depends on what time frame you're on, honestly. So if you are trading the 1 hour chart, you can definitely look. Let me go all the way back. So if you're on a 1 hour chart, I would probably go back maybe 5 days, 6 days, depending on the price action, honestly. But I mainly I'm looking at my setup first, and then I'm looking at the gaps. But I look at the 4 hour and the 1 hour just to see, okay, how big is that imbalance or how big is that gap as far as on a higher time frame. Let me go to the 4 hour. So if you go on the 4 hour, it's gaps all over the place. I got a gap down here. We have a gap all the way down here. But this is on a higher time frame. So yes, I pay attention to it on the 4 hour, but where is my setup at? At the end of the day, we're still taking our trades on the 5 minutes. So I don't want to overanalyze on the higher time frame and we're not taking no trades because it just imbalances all over the place. No. At the end of the day, you just need to master gaps so you can see your setup more clearly. And then when you take the setup, is there gaps in your direction? So it can make more sense to even take that trade in the first place. That's why we got to really understand gaps. But so let's just fast forward. Let's fast forward. I don't want to overanalyze these gaps. Fast forward, and that'll be our trigger right there. And then we'll just take that buy. Now that would have been a dub. Just off of that, filled in that gap, took off. Now, as it's taking off, it's also leaving more gaps. So let's look to the right-hand side of price. We have another demand, literally right here. Another demand right there. And if you look at that green candle, look at the body, only the body. We got a gap from right here, right there. That got to get tapped into. Now let's see if it get tapped into. Let's say you got a higher probability demand, but there are gaps below the demand. Does that affect the probability? Yes, it does. Yes, it does. You have to prepare for both. Like say if, I'm just going to just draw a candle. I'm just going to draw a candle right here. Now say if that was demand and we will have to wait for it to get into that area. Yes, that decreases because it may tap into this and go up, but then only go up for a little bit, but really want to come down here to go up. But sometimes it don't always happen. Sometimes, like New York session, it may come down to the zone and never go over here. It will never come over. It'll just keep going up. So that's why I say you just have to prepare for both situations. But the cleanest ones, in my opinion, when it comes to these like high probability setups, is when you have a demand or a supply. Or okay, so for a demand, there's no price action sitting up on you. Like you just at a swing low and you have a breaker structure. That really increases the chance. And the same thing for our supply. When you all the way at the top and there's no price action above you, and we're breaking structure to the downside, those are the ones that be like the big, like the good ones, like really, really good, like no cap. We can never be sure when a gap will be filled. Exactly. We don't know when it's going to get filled. We just have to pay attention to it. It will fill a gap at some point, but we don't really know. Exactly. Exactly. You can have these marked up and it won't even tap into it in that session. It may tap into a London session, but it just, we don't know. Oh, my bad. Let me go back up because I'm going a little bit too fast. So this was a demand right here that had a gap. I'm gonna draw a box on it. And as it was coming down to that demand area, we also had this right here. Now remember, we always look into the right-hand side of price. So this is also supply as well. And as it went up, it also went down. So there's like a double move at the same time. Like it tapped into that, you could took that buy and then close some positions at this supply and then take the sell. Let me look at the EMAs. And the EMAs, we are under the 200. So that would probably been the more ideal setup was that sell. But then that's crazy because it held. This the thing. When you're in between supply and demand setups, like I don't really like trading in between because we don't know which one is going to hold. This one looked like it was going to hold far as the supply, but then it came back into that demand and held. So I just like to just take my money and go. But these situations, you're going to run into these type of situations all the time where you're stuck in between the supply and demand, and we don't know which one is going to hold. Best setups are at the bottom of demand and the top of supply. Facts. In that case scenario, you like the supply. Let me look at it. Let me look at the 1 hour. Okay, so this is kind of like ranging on a 1 hour, 15 minute. They both have a break of structure. They both do. It is a tough one because this is a break of structure and this is also a break of structure. But this one just had a more impulse than this supply. So I can't really say, oh, I like the supply more because they both break a structure. It's just this demand right here have a little bit more of aggressive buying. Like they really took their time, then tapped into it, and then they tapped twice. So I mean, and we did some homework on when it taps twice. When it taps twice, sometimes they take off with that second move. So I mean, both of them was a win, but I mean, every single one was a win. Honestly, the first tap and the second tap and the supply, they all was wins. But honestly, I would probably just went with the supply. I'm gonna be honest. Even though that wasn't the big massive move, I would have went with that. But yeah, let's fast forward because I'm still not done with this with these gaps. So here go another demand. After that took off, here go another demand being created right here. Now I don't know if this is gonna hold or not, but this whole green candle right here is a gap, literally. From right there to that red candle to right there. I'm gonna fast forward. Okay, now as they are coming down, the gap is getting smaller because they just got to balance out the market. They're gonna have to do that. They can't just keep going up. They're not gonna do that. And what do? Tap right back into it, and then takes off. So what if you got a high probability with no high probability low, but the price is breaking structure to the downside? Oh no, then that mean if it's breaking structure to the downside, but it left a gap, that mean that might just be a downtrend then. You feel what I'm saying? Like if they left a candle, but it's dropping, but it do like a little pullback, and you say it have it's breaking structure to the downside. I'm not really understanding how can a demand break structure to the downside? You feel what I'm saying? Like that don't really make sense. Honestly, I wouldn't even take it if we're breaking structure to the downside, but we have no breakup structure um, going up, and it's just like we're dropping. I'm not about to take that. You said how would I enter this right here? I mean, simple, right here. Get this off. That's like a just a poor trade. I'm not gonna lie, but no, I would enter the trade literally right here. As soon as it tap that demand right there on the 15-minute, that's my entry right there, and literally I'm putting my stop loss literally right there. And then if we look over here, we have gaps. Now I can do the replay mode so you can see it. But say if I did into that trade, this would give me confidence to try to hold a little bit longer, because if we look to the right-hand side of that body, no price action. Right there, no price action. Cool. And if you want to really be safe, you can just get out right there if you really want to be safe about it. Trust the trend. Yeah, definitely trust the trend. Do you mind showing me one breaker structure setup? Yeah, we can do that. Yeah, but that's really what I want to talk about as far as just the gaps. The gaps, just look at the body of the candle. Okay, look at the body of the candle, look to the right-hand side of price. That's really it. The body of the candle, look to the right-hand side of price. Now, when it comes to the demand, we want to see aggressive buying with like a red candle that never got tapped into. So that little impulse move, it came back later to take off again. Like, these are the setups that I like taking all the time, like no cap. But let me show you. Let's go find another setup that has a breaker structure for bro. So we can. I'm gonna just stay on a 15-minute chart, because it's gonna happen on all time frames anyway. So let's see if we can find one that's really good with a clean breaker structure. I mean, a clean one. Perfect. Okay, right here. It's the replay mode. So let's go to the line chart. Now, again, you gotta know your clear breaks of structure. So right here, this is a swing low right here. That's a swing low. And this move right here broke that low right there. It literally broke that low. And let's go back to the candlesticks. Oh crap, my bad. Let's take this off. So that's a major low. Yes, it's a major low. This is a swing low right here. And now let's look at the EMAs just to see what it's looking like. Okay, that's even more confirmation for me to even take this setup. Let's take this off. Now, if I'm looking at this candle right here, I'm looking at that candle, that gap is extremely small. But you only going to see this when you really like master gaps. But overall, gaps are really easy to see, honestly. But let's zoom in on that candle right there. Let's box it in. We have an extremely small gap from that green candle to right there. Between those two lines, that's an imbalance in the market, aka gap, and the market is going to want to fill that in to reverse every single time. Now, I'm not going to say it's going to do that every single time, but that's really small. You got to really see this stuff. So let me fast forward. You're just going to see how they just literally just going to wick into it and then reverse. Like, you know what I'm saying? Like, they literally just like they're going to wick into it and then they're going to reverse. Now, some people be having sell limits literally right there at the zone. Like, no cap. Like, you can do that if you want to. However, some days it may not hold. So if you want to use a sell limit right there on the bottom of that green candle right there, you got to accept that risk, because some days it may not just reject like that. Some days it will, and the break of the candle is just not going to be it. Some setups where you're going to have to just get in aggressive because that candle is just so large, versus you having a beautiful break of the candle right there. All the break of the candle is just extra confirmation to get into the trade. But again, you can use sell limits literally right there and you're going to be good. But yeah, that little smidge right there, that little smidge, you're just gonna tap right into it and gonna drop, and you feel me? That's just money right there. But this is a break of structure right here. That low got broken, came back into it. You would have sold right here. Boom. What about monthly supply and demand? Oh no, sir. Nah, I look at daily, but like monthly, like I'm just not doing that. I'm be honest. But I'm pretty sure, like, let me see. I'm pretty sure they got one that's just like super clean. Right here, boom. This is on a daily. And we have a breaker structure. So here go a swing right here. And we extended that swing. This right here, this is a lot of pips, even for UJ. But are you gonna really sit through this? This is like 3 days. It's like 3-4 days. Is it still high probability if the gap is really small? It don't matter what size the gap is. It don't matter what size the gap is. It can be tiny. It can be large. It doesn't matter. They still got to balance out the market and then reverse. How would you approach a setup with equal gaps above and below? Because that's a good question. You're gonna run into situations like that as well. If you have gaps that's like you got hella gaps sitting below you and hella gaps sitting above you, you just kind of gotta just take the setup. What can you do? Like if you see a demand, but you it's hella gaps below you and hella gaps above you, it's your choice if you want to take it or not. I'm not gonna lie, like do you want to take it or do you want to just pass on it? It's okay to pass up setups. How would you find a lower time frame entry on that daily? Let's go back to the daily. Zooming out on a higher time frame won't help. It depends. It depends. It really depends if we are at approaching any other higher time frame supply and demand setups. What is the EMAs? What is the trend for that day? Like it's factors, but if you just like solely like, okay, I don't want to take no setups unless I'm at the very bottom of demand or at the very top of demand, it's like you're not going to be taking a lot of setups because those are the most beautiful setups and we don't get those all the time. So okay, so let me let's see what this looked like on the 4-hour. So if I see a demand on a daily, now this is for like swing traders, honestly. So if I see a demand on a daily, let's go to the 4-hour. Okay, now we can make our zone smaller. Now our zone is smaller. Okay, now on 4-hour. Let's go to the 1-hour. Now, if I make my zone any smaller, it probably won't even hold up, honestly, because this is the daily. I don't even think it's going to tap into that, honestly. Like, oh, crap. Yeah, it's not. It's just going to keep going. So this 4-hour daily right here. I mean, no, I said 4-hour daily. This daily demand right here, I wouldn't even, honestly, matter of fact, let's go back because it's, first of all, if you keep making the zone smaller, eventually it's not going to tap into it. So I'm going to go to the 15-minute chart and I'm going to see if I can see a setup that's going to have a break of structure going in that direction. Okay. So we already know that we had a daily demand. But if you keep making this daily demand smaller, it's never going to tap your zone because this is a daily. So this zone is huge. Like, you know what I'm saying? So let me go to the 5-minute and see if we can see a setup. Oh, crap. Man, I hate TradingView, man. Like what am I paying for? Like, this is just stupid, bro. I can't even go back any further. Let me paying for TradingView. You don't even get all the data. Like, what am I paying this for? Stupid, man. And that's not my entry time frame. I wish I can zoom in on a 5-minute to see what this looked like. because this can possibly be a 5-minute demand like down here to take that up, but I can't even do it because TradingView just so trash, bro. Yeah, I can't even do it. Okay. So anybody have any questions though? Anybody have any questions about gaps, supply and demand, different time frames? Like people was talking about risk management too. How are y'all risking y'all accounts? Like, are y'all risking it in percentages? Are y'all doing fixed lot size? Like y'all just doing only 5 standards, 2%? Because at the end of the day, like we can catch these setups, but if you're risking too much and you lose, like you're done. Like you're done, bro. Like you just won and then you just gave it back because you know what I'm saying? The percentage. Okay, 1 and 2%, twin trading. Can't talk about leverage. I mean, my larger account, I use 1 to 300 leverage, but I don't even need that. When I trade with the challenge account on YouTube, I just use 1 to 500. But I think just 1 to 200, 1 to 300, that's really all you need if you got a nice account size. You know what I'm saying? If you're trading with like $1,000 account and you got like a 1 to 100 leverage, like you're not really making no money for real. Do you limit yourself to 2 trades a day? Absolutely. If you first trade win, and you go for another one. Oh, okay. So if you're saying like if I win the first trade and I decide to take another win, or if your first trade loss went in at the end of the day. No, I always do 1 to 2 trades. Most of the time, like if I win my first trade in the day, and it really depends on how much it is too. Like if I'm up like 2,000-3,000 off of just that one setup, I'll be so content. Like I'm just content because it's just like, man, I just did that in 30 minutes. So it just really depends on how many trades you want to take. I just really feel like once you start trading with larger accounts, you really just need like 3 good setups out the week and you good. That's just how I feel, honestly. That's just me. I just really feel like you don't need to trade every single day. Yeah, that's just how I feel. Can you show us supply demand setup top and bottom? How you said no price action. I mean, I have to find that, bro. Like, you got some charts of that, as far as like in being price action at the bottom and price at the top. I have to find that. Let me go to. Oh no! I wanted to show y'all this before I get off. This because I got like 20 minutes. So let me look at let's look at this. Let's look at this. So high probability is when price. High probability is when it's filling in a gap to reverse. Okay. Do you look at any chart patterns? Inverted head and shoulders a little bit, but other than that, like no, I don't be doing like what's that called? Like harmonic patterns and stuff. Like no, like inverted head and shoulders is like the only thing I like really like. Like that's probably like the only pattern that I really pay attention to. Other than that, like I'm just trading my regular setup. So if I'm looking at this, I'm gonna mark up all the high probability supply and demand setups that's just here in between those blue lines. Low probability is when there's aggressive buying with no gap. So I'm gonna explain that too. It's just no gap on there. I got a whole webinar on low probability setups. It's no gap. Like we're just trading like a demand and supply with no gaps. So I'm gonna draw this out. Now, if I'm looking at this one right here, it had a demand at the bottom, but they both won. You feel what I'm saying? So don't be afraid to take setups like this. This setup right here, people be like, no, I ain't taking this. I'm gonna wait until get down there, which is nothing wrong with waiting for this one, because obviously that was the real move. but you can still scalp this though. Now this is on a 1 hour, but I'm just saying like you can still take this as well. You don't have to wait until the one that's at the very bottom, because when it was up in here, people may be a little afraid to take this type of demand right here. But this was the real demand. Now, if I'm looking at these two setups, I'm going to take this one, even though we still got something that's sitting right here that's untapped. That's why I said you have to prepare for either scenario, because we don't know which one's going to hold. Have the zones both marked up and see if they're going to hold or not. Because this one can very much get blasted through, and then it would have been disrespected. You know what I'm saying? Is there a higher probability with no breaking structure? No, yes. It's still high probability. Still high probability for sure. But all of these have gaps on it. Now the low probability ones, where is it at? Something like this. If you look at this red candle right there, wicks have been coming in and out. Now this have a break of structure. This one have a break of structure, but there's no gap on this candle right here. So with that being said, if I enter a trade like this, I gotta give my trade some breathing room, because I don't know if it's gonna fluctuate in this box or not. I don't know. But this is a low probability setup where they have no gap. It's just a regular demand, no gap, and then it takes off. Would you set an alert at the bottom one below? Let me see. Oh, you talking about this one? Yeah, definitely set alerts, period. Set alerts, period. Because if you in a chat while we're taking trades and you miss something, you're gonna be tight. You're gonna be mad. Set alerts, period. I set alerts. I be getting irritated when I be missing setups. Like I go to the kitchen or something. It's always when I go to the kitchen. I be scared to go to the kitchen. I ain't gonna lie. I'm always missing something. So set alerts. Like all you gotta do is just go on TradingView. Put that right there. Boom. Well, it's on replay mode, but basically you just hit that clock and then you good. I went to take a shit. Silly, bro. I went to take a shit. Crazy, bro. No, I'll be scared to go to the kitchen, man. For real. But anybody got any questions, man? I do apologize for my internet not working. That's ghetto. I'll be honest. That's just ghetto. That's ghetto. I ain't gonna lie. But yeah. I really don't have anything left. People would just ask me, okay, what about, can you talk about trading plans? Trading plans. Do everybody have a trading plan in here? Before I get off of this, do everybody have a trading plan? Is it on a wall? Do you have it written down? Or you just be like, okay, I'm gonna just trade NAS 100, risking 1 or 2%, and that's it. Like, you know what I'm saying? Okay, so okay. When do losers ever come into the picture? What you mean? What you mean? What you mean losers? It's more like losing trades. I'm about to make new one tonight with strategy in here. Yeah, for sure. Mine's on a sticky note. Do you set your stop loss and TP based off of TradingView? Always based off of TradingView. When you look at MT4, it be looking crazy, man. Even on Henko trade, no cap. I'll be looking, I'm like, hold on. FXCM or Owando on TradingView look nothing like MT4. So I just be like, you know what? I'm basing everything off of TradingView. Everything off of TradingView. Yep. But yeah, you definitely gotta have a solid trading plan. Stick to it no matter what, man. People be trying to have me trade on Wednesdays. No, I'll be breaking my rules when it comes to flip accounts and challenge accounts. You know what I'm saying? I'm not even taking that stuff serious. But when it comes to like account that I'm trying to live off of, like, no, bro. Like I'm really strict. Like I'm not trying to lose large amount. Like this is my money. Like this is not prop firm money. So that's why you're gonna like when you're trading prop firm money and you take that and you put that in your real account, you're gonna trade that account completely different from your prop firm. I promise you. I promise you. Is AU back on the watch list? I guess. I guess. You know what I'm saying? I guess it did come through Thursday though. You're gonna end trading on Wednesday on the month. It be setups. No, it do be setups. It do be setups. I can't cap. But I'm just so strict to my trading plan, bro. Are you closing trade with a PA? Hit your trading view long or short too? PA, what you mean when you see a PA? I don't know what that means. Oh, price action. Yeah. So when I see the price action, like when I be on Instagram and I show like, okay, it's hitting TP and then I'm about to close on MT4. When it's going past that green point, that mean I'm about to close. Like, you know what I'm saying? I don't really be having set TPs and stuff on my MT4. I'm looking at trading view. That's what I'm looking for. So yeah, like when they reach that green area, I'm closing some positions. So you don't use the TP. No, not on MT4, no. Because it don't be accurate, bro. It just don't be accurate. It be off a little bit. Sure, go ahead. All right, for sure, bro, for sure. But any last questions though? Any last questions? I'm gonna have to fight whoever knocked out the internet. It's just really just blowed me. Like my whole day was like irritated. But yeah, but far as like this week with NFP, man, people was asking me like, bro, these setups are not holding. I don't see no setups. It's NFP week, bro. Like I already done been through this in January and you know what I'm saying, and in December, especially December, November, like you really have to be careful. Like you really have to be careful. Like no cap. Doyle, demo trade Wednesday this week on New York session. Yeah, I can. Yeah, I'm gonna do that. Yeah. No problem, Edward. Can we get first part from earlier? Maybe that was some great info from. Okay. What was I talking about? Let me go to USD CAD. Yeah. Internet was just pissing me off, man. But let me see. Oh, okay. So what I was talking about earlier was the process of what I'm just looking for when I wake up in the morning. All I'm doing, because people be thinking like I'm like marking up like everything. Like I'm really not. I'm looking at the charts. Once I see my setup, I'm going to the higher time frame. The VIX is the volatility index. So basically, if I don't want to say the wrong thing, but basically like if the volatility index is going up, NAS 100 is going to go down. And the DXY is the dollar index. So that's like the opposite of euro dollar. Yep. But basically what I was talking about earlier before I got cut off by this little tropical storm that was going on, the only steps that I'm doing is I'm waiting for the high probability setups because those are the ones I just bread and butter I make the most money with. I'm waiting on those setups. I'm going to the higher time frame, which is the 1 hour, to see what is the trend. Are we already at a zone? And is anything is giving me an idea that this may not work out. That's all I'm really doing on the 1 hour. I glance at the 4 hour just to see, okay, are we at a higher time frame supply and demand? That's really it. And I'm taking my setup on a 5 minute. And I'm also paying attention to the EMAs. The EMAs have saved me a few times. I'm not gonna lie. So I gotta put respect on, especially the 200. These other ones, they cool, but the 200 have saved me a few times because stuff like this, hypothetically, I have a demand right here, and say it did something like this. This red candle just wicked, and it started breaking candle up. It's about to be a false move. It's about to be a fake move because it just broke that candle, but then it dropped. Stuff like that, I've noticed when the 200 is cutting in the middle. So when I see the 200 cut in the middle, I'm passing it. I'm passing up that setup because I know it's about to be some choppiness. I can show y'all numerous of setups where when a 200 in the middle and you see demand or supply right there, bro, it's about to be some messiness, some choppiness, and it may fake you out. And most of the time, it's about to fake you out, no cap. So I just pay attention to the EMAs, especially on my entry time frame. When it comes to like the EMAs on a higher time frame, like yeah, you can pay attention to it, but when it comes to my entry time frame, I need my EMAs to be spacing out like how it did right here. How it did right here. Like this supply right there, like we got all the EMAs at the top. This supply right here, we got all the EMAs just right above it. I like those. What do you mean by the 200 in the middle? The 200 EMA. I'm going to find one right now for you. I'm going to find one right now for you so you can really see what I'm talking about. Let's go on NAS. Let's go on NAS. Let's go on NAS. But before I find one, just look at this one though. Like this supply, now this was NFP, but you see how 200 above, we spaced out. This is a downtrend. I'm going to take that sell. Would you completely skip the trade when it's coming up to the 200, or would you consider that low probability? If it's coming to the 200, but it's lining up with my supply and demand setup, I may take it. It just depends on the location of the 200. You know what I'm saying? I'm trying to find one. Let me try to find one. Okay, right. Oh no, damn! I thought that was gonna be a good one. Let me see. Like stuff like that is just too beautiful, bro. Like like, this is the stuff that I just love. Like they got a demand literally sitting right there. Oh, I took this. It's not about I took this. So you see how the 200s was literally sitting at the bottom, like literally sit at the bottom. Because like we just know this is an uptrend and tapped into. I'm taking a buy, boom. Like the rest was history. But yeah, I don't think it NAS 100 ever like be choppy like that, especially during the time that we trade. Okay, right here. So, like bro just said, am I going to take this setup, this supply setup right here? If the 200 is literally like right there, yes, I'm going to take it, but it's not cutting through the middle of the candles. That's the thing. If it was doing something like that, I would not take it. But since we're at our entry and the 200 is literally right there at my entry, I would like that rather than it looking like that. If the 200 EMA was doing something like that, I probably wouldn't take that. I'm not gonna lie, I probably wouldn't take it. But since it's not looking like that and it's looking something like this, I like that. I like that. And we got to break a structure. If you can see this swing right here, that swing right there, broke that low and then it came back. The break a structure be key, man. I'm not gonna lie. Break a structure be key. Okay, right here. Now you see how this look. And do you see how this look? This is what I'm talking about. This is exactly what I'm talking about. I don't like nothing like this. Like this stuff right here, no. When it cutting through the middle like that, no, sir. So even though this probably was a win, if you put that supply right there, did it even tap? Hold on. Oh, it never tapped, or did it? No, it never tapped. So yeah, stuff like that, it's a no for me. It's literally a no for me. It's just playing around. You think you got a demand right here, and then boom, blast through it. It's dropping. We've got to break a structure, and then even look at this. I know somebody gonna do that. They're gonna have their supply right there. We gotta break a structure, right? Break a structure, and then it comes to your zone, and then it just gets super messy, and then it just goes up. No, stuff like that. I'm looking at something else. I'm looking at something else. So that's why I say, if you don't even like EMAs, just at least put the 200 on just to see where it's at, because the 200 EMA have saved me. I have avoided trades like, okay, like it really just did that. And then look right here. Look at this setup right there. Now we're above the 200. Now we'll be taking a trade right there. And at least we getting a little bit of momentum right there on that break. We can take a little bit of that. That's a lot on that. So with that being said, I'll be trying to take my trades as far away from 200 as possible. Like no cap. So that's all I already got on this webinar. I just wanted to just break down gaps. I hope I made it clear for people. Like all you got to do is just look at the right-hand side of price. The market usually want to balance itself out. And look, oh man, this is beautiful right here. Like this is at the very bottom. Now, it's probably impossible for us to catch something like that. But if you can catch something like that and you got imbalances and gaps right there, I gotta get filled. Like that's just beautiful, man. No cap. Yeah, I had to, man. I had to. Yeah, that's really all I got, man. I ain't gonna lie. Like it's gonna be the same thing every single week. People just come to the webinar to get their questions answered. I hope I made stuff clear as far as these gaps. All you have to do is just look at the body of the candle, look to the right-hand side of price. If it's no price action to the right-hand side, it has to get filled in, bro. It literally has to get filled in. Now, do we know it's going to get filled in during the time that we're going to trade? No, but we have to be prepared either way. But yeah, that's it, man. Next week, homework Tuesday. We catching setups. We gotta be careful, man, because sometimes the week after NFP be a little shaky, bro. So just be on your toes, take your setups, don't overtrade, man. And if you're taking your challenge, bro, don't feel like you're under pressure, bro. Like, don't feel like you're under pressure. Just take your setups like you've been taking them, bro. But yeah, that's all I got, man. I hope y'all have a good weekend. My bad on the internet, bro. I don't know. I'm paying my internet bill. I don't know, bro. Like, I just moved here, so they need to get it together. But all right, man. I'll see y'all in the chat.